Tuesday and Wednesday, we will have possibly the biggest impact on the market, like I said, for the foreseeable 2 to 3 weeks. Possibly even more important than the upcoming Fed meeting, in my opinion, going into this. Now, we've already seen some negative news start to crowd the market. However, what we can say and what we have noticed is that you've seen a really nice bounce from the 200 SMA region. You started to almost make lower lows here on the Nasdaq and the ES, but ultimately you found support, like I said, at that range. Now, a little bit surprising in the volatility that we're seeing down in this range, that is worth mentioning, and you did make a higher high here on smaller time frames, but we need to talk about some of the big picture and the overall trend that we're in right now, because there's certain points where if you get above these levels, you have to flip back to saying highly likely we make new highs, but there's also a point of saying you can't rush to that thesis, and you have to say, look, we still have to expect downside based on fundamentals and based on a few bullets we need to cover here in a sec. But before we go over that, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm making videos for you, so you are prepared. I have the daily updates coming Monday through Friday, and then Sunday, like today, is more of a broad view of what's happening in the market and what to expect on the long term. But also every Saturday we have new educational videos dropping for you, so you can learn along the way as well and understand what I'm doing inside these charts when it comes to technicals. And I'm even going to work in some fundamental stuff for you as well, so consider liking, consider subscribing. Also, today is Sunday, so of course it's newsletter day. The link is down below. It's absolutely free, just so you know. That will be released today, so just so you are prepared. And again, there's no advertising. If there's any advertising, it's literally all the way down at the bottom, so it's not like we're forcing anything down your throat. It's the calendar, it's the economic calendar, it's the charts we're liking with all the key levels we mentioned in every single video. This is all just to help you trade and hopefully get you into better place. Again, absolutely free. The link is down below, so make sure you check that out. Also worth mentioning, we will have some new available spots for the $30 tier here in Discord. The newsletter will get access first, and again, it might not be as big as possible, but it will be down below, so make sure you're checking that out if you are interested. But never feel the need to have to subscribe or pay for any content. We want to give you as much free information as possible. Let's dive back into the chart. So again, this week, I'm going to tell you right now, biggest things this week: March 7th, March 8th, that's going to be Tuesday and Wednesday. That's when Powell's speaking. One day, March 7th, he's speaking in front of the Senate, testifying, and will be open back and forth questions. Then Wednesday, we'll be in front of the White House. It will also be back and forth, I do believe. But I know for sure March 7th, we'll be back and forth with the Senate. This is going to be very influential in the biggest factors that we've had. Powell has not talked since the last Fed meeting, and we all remember what happened at the last Fed meeting. He spoke, and what happened to the market? Well, spoiler alert, you went crazy. You went straight up. So again, this is why I think we have to be paying attention to this, and this is why I think this has to be the focus. So, my opinion here. What am I looking at? Again, I'm just going to go over some charts really quick, go over some stocks I'm liking, and then overall visuals as well, what to expect from my fundamental viewpoint. Now, we've already seen the Fed talk about raising price targets on the Fed fund futures, right? Kashkari came on, said 5.5 was his ceiling. He's saying he sides with the thesis that he's probably going to raise his target a little bit higher at this next Fed meeting. Now, we also had, on the contrary, we had Fed Bostic come out, who is not a voting member, but he did say this could possibly be a blip, right? And what does that mean? Basically him saying that this could just be a little bit of an upside, and then we'll probably start coming back down, right? That's his overall thesis. And giving you a visual, it'd be like we're dropping, we start seeing some sideways action, and then we drop again. That's kind of what Bostic said. And from that, when we were down here at lows, we saw a really nice rally. And I've been saying this basically in previous videos, is that we haven't got any nice bounces. This was a really good bounce. This was a sign of strength. And what this showed is that ultimately, if we get good news, buyers will indeed show up. That's what's really good to know here, okay? So these are things we need to be visualizing and trying to understand. It's worth mentioning, you're coming into our supply right now on NQ. You go into ES, you did break out of that range, but you're just coming into another range right now, and the upward range of around 40, I believe 90, 40, 75 roughly. So you're just coming into new ranges, and again, there's gonna be a lot of resistance here, but it's worth mentioning, again, I have to highlight, is that you're getting a really nice bounce here. So again, if Powell comes out with any type of dovish outlook, okay, I'm going to tell you right now, I think you have some upside potential. However, what have we been saying though? Tuesday and Wednesday are what's going to lead the market. Ever since we hit the 200 MA, all eyes have been forward looking towards what's going to be happening out of Powell's mouth. Okay, so that has to be our focus now, is Powell, Powell, Powell. So coming out Monday morning, it would not surprise me if we get a little bit more upside to come to the top of these ranges. Not a surprise whatsoever. We've seen a lot of shorts, in my opinion, taking some profits down here at the 200 MA. Again, trying to show you why this level is so important. Here on ES, you can see the level and how volatile we get at this range. And if we do actually hold below it, it's easy money to the downside to short. Like, we've had so many great opportunities, right? So we need to identify that first. But on the Nasdaq, it's a little bit more important because we haven't been above this since last year, or actually before last January. So these are things we need to be considering there also. So Nasdaq, very big support, first real test that you've had in a long time. But I would try to identify and understand that. But I'm going to tell you right now, Monday morning, Tuesday morning, I don't believe that's a time to go long or to force any plays. I'm going to tell you right now, sitting on my hands Monday is going to be key. I'm going to tell you right now, I don't think it's going to be a force type of play. Everything's coming into major levels. And I'm going to tell you right now, if anything, in my opinion, a bounce on Monday is a shorting opportunity. Right now, the risk to reward to the downside is there for me. Again, that's my personal opinion. I do believe the Fed is going to stay on track, though. I think the Fed's going to stay with the 0.25 rate hike going forward, but they're just going to extend that target. I don't believe there's a huge reason to jump to a 50 point or 75 point ever again. It's just slowly, gradually raising and raising and raising. But the tone you want to hear from Powell for the downside specifically is going to be, is inflation potentially spiking? Is this concerning? Where's his head at with it? If he shows any signs of concern, downside will happen. I'm going to tell you right now, downside will happen essentially until the next Fed meeting. Promise. That's my visual, my outlook. But if he says that, we just need to take data, we need to take it one step at a time, I can't really imagine that he's going to be too bullish, going to tell you right now, or, too have an optimistic viewpoint with any type of spike in inflation. But, just putting that out there to be level-headed and unbiased at the time right now. So going into a few of these other bullet points, though, I want to talk about VIX. There's a few things, VIX, DXY, the yields. Now, when we dip on VIX like we have, right, VIX has always been a really great buy down here at these levels, 18 through 17. It's been awesome, man. You can go all the way back to 2021 and 2020. That's been pretty fantastic. Every time you've come to this range, you had a really strong bounce. So just giving you a visual of this range and where you're at. Now, I will say, we've talked about the S&P, the new zero DTEs, and how it has effect on the lower contracts coming into SPX, but I'll still say VIX looks good at this area for a bounce. Just couldn't tell you right now. But again, it's setting up for Monday to have a little bit of potential upside with the downside following through on Tuesday. Next up, DXY. Again, DXY, in my opinion, getting a little bit of a flag here on the daily time frame, looks decent to get some upside. Now, again, I haven't been the biggest bull on DXY, but I'm going to acknowledge right now you still are in an upward trend. And I think this goes directly and correlates directly with yields. What are yields doing? What have we been looking for? The 10-year to get back to 4%. Pretty insane. You got back above, you got pushed right back down. What I will say is, if we look at these yields and the inversion here on the yields, what's happening here? Your strongest inversion going all the way back to September, and you're still climbing. So even when we got that upside on the market, yields weren't really dumping. And if anything was dumping, it was the 30-year yield. So that's the most concerning part. So investors are still prioritizing these short-term yields over the longer-term yields, which in my opinion signifies the weakness in the overall weak outlook on the U.S. economy. So another thing you need to be watching for. And again, if you're new to the channel, what does the yields indicate to me? The inversion specifically, it signifies every type of recession that we've had. 2018, I don't want to go into this right now, it could have been really bad, but 2018 is partially the reason why the COVID crash was so bad. We can also go into the '08 housing bubble back here. You can go back to the .com bubble. Great instances, gives you all the visuals you need to know. But it still shows here, if we look at anything here, you could argue potential head and shoulders trying to play out here, but it looks more like an ascending triangle trying to push up here. And again, I want to let you know, these are the highest levels. These are higher levels on the inversion chart than we had during the '08 housing crash. important to identify. Am I saying that there's a housing crash coming? No. What I am saying, though, is that we're in a very big issue with inflation that I do believe it could become entrenched. And I do think there's a possibility that Powell could come out and say that that's a concern for him if we stay on the same track. And if that's the tone he takes, I'm telling you right now, the downside could get ugly and it could get nasty. So when we go into anything else, you need to keep this in the back of your mind. Next up, I do want to look at TLT. Now, TLT, what have we been watching for? I've been saying I want to see this get below 100. We got below it on, I believe, Thursday. You bounced back on Friday. Really strong bounce, by the way. Really, really great bounce. So TLT is trying to recover against the bonds, which again gives you a little bit of mixed signals. But I will say right now, TLT looks good. Even though I'm bearish, I have to side and say, look, TLT, very strong recovery, a little abandoned baby island reversal, if you will, to the upside. Very, very strong notion. Again, I'm not a huge pattern guy when it comes to some of these candles, but I will say it's a pretty bullish reversal sign just there. But I'm going to tell you right now, fundamentals beat technicals every day of the week whenever they really come out strong. Next up, oil. Oil's been very big here. Oil's been trending sideways. And this is, in my opinion, why we're starting to see inflation stagnate or even blip back to the upside, is because what's happening with energy and commodities. People keep saying that commodities are going to come down. And again, those people aren't really that educated, because when we look at what's happening with China and every other economy out there right now, the demand for oil, the demand for energy, the demand for commodities is going through the roof. China is in the middle of a massive boom. I just was reading on Twitter and just reading in the news that China's expected GDP, again, we've already talked about it, it's expected to be at 5%. That's pretty great growth. The United States is supposed to be almost negative, right? That's for 2023. So just identify what's happening there. And if that happens, with the demand output going up, that will cause energy to resurge, okay? And I'm telling you, if oil starts breaking out of this, oil could go crazy. If oil gets back to 90, we could see a lot of pain, resurging with inflation. This has been one of the goals of things we have to be watching for. But again, just look at how oil is getting destroyed. Look at something like natural gas, how bad this has been getting destroyed. Any type of bounce on these commodities will immediately impact inflation. Immediately. So you have to be able to identify that. And that's why you're already seeing the pain bleeding back into the inflation numbers of this last reading, because unemployment numbers are not going up, which they need to, and they're not. We've already talked about what's happening with wages. We talked about what's happening with jobs. And again, it's just a cycle that will never break what's happening with inflation, right? We're going to have some bad times in this economy, in this market, before inflation gets handled. So right now, I think this has to be your primary concern. Again, Tuesday, Wednesday, most important days we've had probably in the past 2-3 months, because I think Powell is very possible to flip the script this week. Now, I do want to go over some stocks, which I don't love to do here on Sundays, but I do think we should talk about a few names out here. And again, I'm going to give you some plays that I like to the upside, some plays I like to the downside. Now, personally, NVIDIA, been talking about NVIDIA. Now, I closed my NVIDIA. I got stopped out of it when we get back above like 233, I believe. But when you're looking here on NVIDIA, if NVIDIA somehow gets rejected from this 238 region and starts coming back down, NVIDIA is still probably one of the best plays towards the downside. I don't even think it's just the gap fill to 210. I really believe you just have nasty downside here. I mean, NVIDIA is one of the most illiquid now at these points. When it gets down here, you're going to have a lot of liquidity gaps, and you're going to have some volatility if you start to break down. But what I'm going to say right now is you don't blindly go short on these, right? I'm going to tell you that right now, because if you do, you're probably going to get slammed. So right now, if you get any kind of continuation, your upside is like the 251, 252, then 258. But again, we want to see if we're going to break and hold above local highs. And I'm going to tell you, you could run really easily. I covered this in the last video, but I recommend checking that out. Going into Tesla, I still believe Tesla is one of the weaker names out there on the economy. What I will say, though, is if we look at what's happening here, is you do somewhat have a bull flag on the daily time frame. You can zoom out and look at the daily, but you are trying to make a bull flag there. What I will say, though, is Tesla doesn't have a lot of good news going for it right now. They had their China news, and they had a slight beat on the China expectations of deliveries, but I don't think that's going to be enough to hold them where they're at right now. If we look at their move year to date, beginning of the year, right, it's over 100%. I believe they have downside, not even to the gap fill. Let's just say, conservative down to 170, right? personal opinion, what I'd be watching for. Again, love Tesla to the downside, still one of my favorite names. Now, more on the upside names of what I'll be looking for value in the short term. Now, we have seen Walmart insiders selling a lot of shares, but what I will say here specifically on Walmart, or Costco, I'm sorry. I think you're going to have some value here. I think you're going to start seeing potentially value creeping in here. Now you can see if you go to the daily chart, you're going to get a better look at this, but you're going to see that there's a demand focusing down here around 448 to locally 459. Costco's a pretty quick mover, so it's okay to have a little bit bigger of a range. And then obviously your next level is way down here at 406 roughly. Now, again, I'm not looking to hammer anything to the call side yet. I want to repeat this. I think you wait till Powell speaks and then you play your plays. Then you focus on what you're going to do, because you're going to get continuation no matter what. If Powell comes out hawkish, you're going to get continuation to the downside for multiple days. If he comes out bullish, I'm going to tell you right now, the continuation to the upside will be even better. So that's why I'm pointing out multiple plays and different setups to be watching. So Costco, even if you come down here after Powell talks, I'd be looking for it. 450, 406, massive ranges here. I don't really think you're going to get below the 443 range though. But if you come down here, I think there's a high possibility you start bouncing back. I've gone over the fundamentals on why I like these. Costco, really interesting and good name. Microsoft, you've definitely been getting slammed. You've been getting hit. You've remounted the 200 SMA. And if we go to something like the 15-minute chart from Friday, you can really get a better viewpoint, and this is maybe a day trade for Monday, is you're getting an ascending triangle here. You've been reversing, pushing back up. A lot of momentum here. What I'd be looking for, you have a few ranges here. You got a daily gap up here at around 261. It's almost $6 of upside. And then again, I'd be targeting the local highs that you have about right here as well. 257. You get above 257, I think you're going to get really quickly up to that daily gap up there. Love Microsoft. Looks really good. These are just a few names that I'm watching and what I am primarily focused on. But again, I want to tell you right now, despite all of that, okay, the biggest things we need to be prepared for, Tuesday. I can't say this enough, right? At this point, you can't even really set targets of downside or upside because you just don't know how Powell's going to come out. But I'm telling you, based on my viewpoint, my vantage point of what I'm seeing from the Fed, what I'm seeing from data, what I'm seeing coming out structurally right now, I have to assume that looking at this market, Powell will not come out with a good viewpoint. It would make no sense for him to get one and a half month of good data and then say, oh, we look great. Because he's already seeing inflation slow, and there's a big issue with what's happening with commodities and what's happening with China. The problem is he's not going to talk about that. And we also need to talk about the looming issue of the debt ceiling, which, again, don't want to talk too much about it because we can't even give information on it because we're not even discussing that as a nation as a whole by any analyst or anything like that. But we need to identify that could be a big problem as well. So if we look at this, I'm just saying we need to take a step back, look at the big picture, and just be a little bit patient here. I think there's a few gambles you could take, but again, I'm not going to recommend that. Do your own DD. This is not financial advice. But again, I anticipate a hawkish Fed. I anticipate Powell to come out with a not so good tone. But I will say, I'll be sitting on my hands, essentially liquid, for when that happens, and I'll be playing the reaction from that time. That's my play. That's what I'm doing. I'll have another video coming out Tuesday. No video coming out tomorrow. Have a good one, traders.